Hello everyone! Welcome po sa Economy. If hindi niyo pa po napapanood yung US30 backtesting session, yung 4 rules of scalping ni Abdallah, please watch this video kasi marami po kayong matututunan dito. At nandito po talaga yung ginagamit nating strategy sa daily live trading sessions tuwing 9:30 p.m. dito sa Philippines. So para makarelate ka kung paano ginagawa to ni Abdallah, please watch this video para makuha mo rin yung strategy niya. So, yan. Samahan niyo na po ako manood.
Hello everyone, and welcome to our backtesting class session. Today we will have our backtesting session on the last week of May. It was an amazing week. We had amazing results, and May in general was one of the best months. And when it comes to the volume that we had, it was super nice and super amazing. So let's start and we'll check. We had a Monday, it was a bank holiday in the US. We didn't trade, we didn't have trade the live. And Tuesday, 28, here it was the market before it opened, it went down all the way. So usually after going down like this, if it opens and resume down, after it start to push up, we take for a wick, a buy, we take a buy. But in the other case, if it opens, makes a wick up, and then continue down, this is the main 4 rules. The rules, always check it in the ECA, and the live session, Forex live session, intro, or pinned in the Telegram channel. So in the rule, we have a downtrend, very simple, downtrend, you can see down. And then if it opens, makes a wick up, we need this wick as a liquidity grab, and then break this support area, which is this support with the volume, it should resume down. So always trend line, we should be on the same trend line. Second, on the same trend, bullish, but here it's bearish trend. Then the second, the volume, we need the volume which usually exists at the US Open for the stock market. Third, we should have the wick, which is the liquidity grab, which like the rubber effect, we call it. After this, we can push in the other direction, and the price action breaking the support, which is here the low of the previous candle. Why the low? Because when you have a high, lower high, and lower high, we expect to have the low, lower low, lower low, and now we expect to have a new lower low. Okay, these are the main rules. I'll explain it at the beginning as I did now. You can do the replay to watch it. But now, from now on, we'll understand how we took this trade directly, these trades directly. So now what should I expect? I expect the market to open. If it makes a wick up and continue down, I go for the sell. As you can see, it opened and directly went up. And then after this, it started to push down, breaking down. So you get the sell. Usually, if you get it here and push up, sometimes it gives before a little bit, sometimes after a little bit. Okay, because while clicking, sometimes it goes 2-3 pips up and then it resumes. So it might give you before even يعني a better price, or sometimes it might give you يعني price plus 2-3 pips يعني down. So here it went down 8-10 pips, and here we are. We close the trade. That's it. This is scalp. 5 seconds, 3 seconds. You made the money. You made 1%, $100 on a $10,000 account. As you can see, it will be a 1%, and that's it. That's easy. That's simple. But of course, step by step, you'll start learning it. You will get to it more and more, and then it will be easy for you. Okay, as you can see, from 10,000, you do the 1%, very simple trade. You sell here, you take it here, and that's it. Some people don't understand, oh, why it's 9 pips? Why it should be 200. These are the swing. Here, the scalp, the lot size is bigger. So 10 pips makes $100. And the swing, you have a higher stop loss. Here, if someone asks me, Abdullah, where is my stop loss? It's above the high of the same candle. It should not go up again with a maximum of 20 pips. Very simple. So because it made the wick up and it's moving down, so it should resume down. It should not go up again and break and continue. So this is how you analyze and you take the trade. The scalp is different than the swing or the intraday, okay? Or the position trade even. Now, You have, this is the first trade. The second trade we took, it was minute. Here, as you can see, it reversed. Low, higher, low, higher, low. Now breaking up, look, low, higher, low, higher, low, higher, low. Now it opened, it made a wick down, and we have this support here, which is the market structure is very important. As we can see, this is a bearish move. We have high, lower, high, lower, high, lower, high. Now we have low, higher, low, but here we have high, lower, high. So this candle is interesting because if it breaks the high of the previous high, this means that you have a low, higher low, and then if it breaks up, it will continue up. It's breaking the structure. And oh, here we are. This will be the buy at this level, taking also 6, 7 pips, 10 pips. Already it hit 10 pips, and you are out of it. You close the trade. Now, the next one also, the momentum has reversed. Now you have low, higher, low, higher, low. And now we have this high that broke two highs already, which means that the next one, if it opens, makes a wick down, and then start to push up, it will be the buy. And the buy will be at this level. Because we have a support here, we have a resistance here. Now, wick down, as you can see, pushing up, it will be the buy. It went down. Look what a rejection. It is rejecting up. You have low, higher, low, higher, low. Try to go down, but it's rejecting up. This means that the volume is bullish. And now breaking up will be the buy. Very simple. 10 pips, you close the trade. You see, if you manage to understand how the structure is working, if you manage to understand how you take the trade, it will be very simple for you to scalp. If you don't understand the structure. This is a simple strategy. It was so complicated, but we made it very simple at some point. And this is how say the end of of the end result. So you take it and you take the trade, you close it. Now, if you can see in 3 trades a day, focused, usually it should not be more than two. Okay, but when you have something clearly like you can see it, you can take usually later on. So you can make 3% in one day in scalp if you are treating it the best way, in the right way. 3% in one day. But you have to do it in the right way. That's why we say we take the quality trades and we focus on the quality trades. Anyway, we move to the second day. A lovely day. Wednesday. Also, as you can see, the market went down all the way, the same scenario that happened before. Now, again, this is the add-on, okay? Always we have the add-on. So if it opens, makes a wick up and resume down the normal rule, you have the trend down, you have the wick up, you have the support level at this area. It's a normal sell as happened before, but always we have the second scenario. If the market opens and goes down, then directly without a wick up, and then after all this move down, after this start to push up again, I take a buy. The only time the add-on I take on a reversal because I believe it will make a wick. And I don't really wait like 10 pips sometimes. I close it at 5, 6 pips because it's against the trend, but it can be a nice buy. So here, as you can see again, it opened, made the wick up, and it's breaking down. So you take the sell and you close it. Okay? We closed it before. Oh, anyway, so here you take the cell, uh, like we have, oops, was like, it took it like 6, 7 pips, something like this, and you close it anyway. Okay, it went down, it resumed down, it was a nice sell, And if you keep runners, some people keep runners. Some people take two cells, they divide the lot, and then they close one, they keep the second one. You can see how much it can be made at some point, especially like breaking down. As you can see, it moves down a lot, okay? So this also depends on the way that you are trading. Now, uh, we had nice trades, nice profits in it. Anyway, as you can see, it was divided into two, and I took the first one. I closed it directly at 2 pips first time, but once the second time it was moving down again, I took the sell again, and we made the profits. Now we go for the same candle was here, but it moved down all the way. The next candle, what happened? This is the example I'm giving you. This is the main example of the add-on of the reversal trade that we take. It opened and went down. Okay, now after going down, it started to push up at some point. This is where you take the buy. Look, it went down. So now, because it went down at the beginning, now breaking up again will be for me a potential buy. Look, now breaking the high of this, oops, no, not this. Now breaking the high of this candle will be my buy for 10, 5 pips, something like this, and you close it. That simple. That simple. Opened, went down, and then pushing up, you take the buy. Where is the stop loss? Some people will say, Abdullah, where is the stop loss if I take it? Maybe it goes down 5, 6 pips, and then the stop loss is below the low of the same candle. The stop loss is below the low of the same candle. You took it here. The stop loss is here, around 14 pips here, I think, or 15 pips. It should not break again down. Even if you take it here, it goes a little bit down and then it start to push up back. You have to trust the system, okay? Trust it. So, and then it pushed up. It was a nice buy. It was a nice buy. Then the next one, again, it opened and start to move down for us. Again, this is the reversal, and here we have this high. If it breaks up, it will be the last buy we take. So almost a third trade. So if it breaks up, look, it's making the wick down. Now, as you can see, it's breaking up. This is the rejection. When you see such a rejection, usually, when you see such a rejection, it's almost 90% guarantee that it will resume up. It's almost 90% guarantee that it will resume up, especially that the candle before was a green candle, which is a reversal candle. But if it opens and makes a wick down, then start to push up, here it's an alert that it should be a potential buy. Okay, then you take the trade and you close it. It's totally fine. You make the profit. It went up like 12, 13, 14 pips since it broke. So it was very nice. And also it was a super nice day. We moved to Thursday. We moved to Thursday. And here we are. Again, the market was fluctuating in the middle. Okay, we have this support area, breaking this area for a wick fill. Let's see if we can close it here. It was a flag, and for me, the buy can start once the flag is done. This is the flag, guys. Second. Uh, this is the flag. Okay. Uh, actually, I don't really like to make any study when it comes to the MT5 and the 4. Anyway, I will try my best. So this was the kind of flag, let's say, and then now breaking up this flag will be the potential buy. Now it opened, it went down. I was waiting the reversal up. It went all the way one way. So my stop loss, well, my entry was here. 1 second. Okay, so here it was, but here this is fast, okay? It's super fast. So here, I'll try to pause it. Here it hit and then moved down a little bit. Okay, then after this, it continued up. This is where we take the buy. Like again, it opened down, was moving up, it had this small retracement, now breaking the high of the same candle. Again, look at this retracement, and then this was the buy. Okay. Oh my God, this is too fast. Oops, not this. Okay, this one. Here, first you can here. Look, it hit and it was slow, then pushing up. This was the buy again, and it was flying up. It kept flying up all the way after the stagnation, and we had only this one trade. All what you need is one trade. One trade can make 1% for you, 1.5. Imagine you are making almost half to 1% every day. Let's say 1% every day. If you win 15 trades, take it like this, okay? Take it like this. We have a huge success rate in scalp. Okay, sometimes in intraday swing less, but in scalp we have a huge success rate. It's really near to 100%, but sometimes we had this one trade. But let's say you have 90% success rate, okay? 80% success rate. I'm going to the worst case scenario. If you take the quality trades, like every 10 trades, okay, every 20 trades, 5 days a week, 4 weeks, 20 trades, 15, 80%, 16 winning, 4 losing. If you lose maximum 1%, if you win minimum 1% or maximum 1%, 16 minus 4 will become like 12%. Let's say sometimes you lose 2% if it's 20 pips, that's stop loss, 2%, but you are gaining 1%. Sometimes it's reversed, like someone, oh my God, you will lose more than we do. No, 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 usually you should not. But let's say, because we hold on, and I will give you by numbers about the super high success that we have. Let's say, for example, I have 10 pips profit, but 20 pips loss. Now, of course, if if I win 5, I lose 5, this is a disaster. But when I win 16 and I lose 4, and I lose 4, if the 4 you are losing, each one is losing 2%, now you lost 8%. And if the 16 you are winning, each one you only won 1%. Usually, sometimes we win 1.5, 2%. But if you only win 1%, which is 16 minus 8. Now you made in 1 month plus 8%. I know the risk reward is different, but also you have one parameter that you should not forget, which interferes strongly in this strategy, which is the high success rate that you have. And this is super important. That's why sometimes that's totally fine, but not like to have a 50% success rate and then you lose risk to reward, you lose 2%, you make 1% always. It's not logic, of course. Okay, but sometimes if you have high success rate, that's totally fine. Okay. Then we go back here. It was this one trade that we took. We go for the last day. We go for the last day again. Now, also, we had a flag. I prefer to do the flag like this. I prefer to do the usually for the flag, the buy will start here. The sell will be here, okay? But sometimes if it goes one way up, so you can have the buy at the high of all this reversal. So it opened and went down directly. Where did we take this trade? As you can see here, there is a gap. You see this gap? This gap, where is it? Where is the, yeah? Okay. So this is the gap. It opened, there is a gap. What a gap means? A gap means that the open was very strong in a way that there is a certain price, which is this area. It at the open, it didn't work. We didn't go through this price. It directly made the gap. Okay. So now it made the gap and went down, which means that 95% of the time it should re-go and close this gap, move up again and close this gap, which means go through this gap, and this is where you can trade. Okay? Here it started to move up for the gap. You take the buy, you trade the gap, you make 10 pips. We are out. Very simple. These are by experience, and these are strategies. Yes, they are simple, super easy, but they make money. And this is why we are here, to make money. Okay? Don't let anyone convince you that it's some this is basic, I have an advanced thing, it's enough, I learned what enough. We are not here only to learn, we are here to make money. If in the simplified strategy, because these, it took me like the four rules and to understand the DAO, and people with us on the live, it took us years to get into this. And we are giving this to you in the easiest way and most simplified way so you can make money. This doesn't mean that this is basic, not the scalp, not the swing, not the intraday. We have the most advanced strategies that no one trade. Now people are learning about this and they try to trade. But when we started, no one was trading on US30 live as we do. So, and I believe till now, yeah, there are no live streams on this every single day in this consistency that we have. But if there is not in this high success rate, and not, I don't see them, but if there is not in this high success rate, so what we are giving you is the يعني, the top of the cherry, as we say, يعني, everything simplified here in the economy. Okay, so this was the buy that we took, and here it was important because I waited and then it made the wick up, tried to move down, blah blah blah. Anyway, so we went to this place, minute 45. This was very important. Why? Because on minute 80 45, it went up. Some people took the buy, by the way. Here it opened, made the wick down, made the wick fill. It was the buy also. But after this candle, it closed. What do we have here? What do we have here? We have this support and resistance area. Why this is a support and resistance area? We have here a resistance, it hit and moved down, resistance hit and moved down. We have this support, it hold here before it goes up again. Now, if it breaks this area, we have a clean traffic and it should go down. Very simple. It opened, made a wick up. Now simply going down, I take the sell. Once it breaks down, I take the sell. No fear. No fear, guys. Very simple. Wake up. It's reversing. We have now high, lower high. We have a red candle before, which is a reversal candle, breaking the structure up, and then it's moving down. What do? We sell. We do not get afraid. We sell. You can make a lot of money, guys. You can make a lot of money. But please focus. Don't click all the time. This is the back testing. This is very simple. This is how we trade the US30. This back testing is a course. If you follow this every single day, you will make a lot of money. Okay? Love you so much and wish all the success for all of you guys. Just make sure always to be patient, to learn, and sometimes in the bad moments when you overtrade, when you over risk, you should never overtrade. You should never over risk. The only people who lose their accounts are the people, by experience, I'm telling you, after the accounts I lost, and thousands of people and student and traders where I was teaching them, I understood that every single person who over risk or over trade, they will lose. If you don't take the quality trade, you focus on the plan. And I always repeat, don't put a daily target for you. Don't put a weekly target for you. Don't put a monthly target for you as in percentage and money. This is my only target. My target is every day to come up to the market, check what is the best trade I can take, focus on one pair, understand how this pair works, focus on this pair. Now, what is the best setup I have? What the best quality trade I will take every single day? This is my goal. with the right risk management and the right entry, the right exit, whether it's profit or in loss. After a year, you check what was your capital, how much you made profits, and then you get your ROI. Don't stress yourself. You are already in a place in the financial market is stressful sometimes. Don't stress yourself. I want to make 1% daily. Maybe there's no opportunity to make 1% daily. Maybe you took a trade and you made half percent. Don't force another trade to take half percent. Maybe you will lose. And then you will not make it. And you will get frustrated that you want to make a revenge trade and you will overtrade and then you will increase the lot. Guys, I'm telling you, there are two ways to learn in life. But the first way is from your mistakes. And this is what 95% of people do. The second way, only smart people do. You learn from the mistakes of others. And I tell you, in this 18 years, I can tell you, I made a lot of mistakes in trading. I learned personally, and I'm teaching you, and I am asking you and wishing from you, do not try to learn by yourself. Because if you listen to what we are saying and I'm saying, you will make it big. No need to lose any account, any trading account. Just work slowly, get the quality trades, get better in the demo account. Once you are really like trusting the result, if you are losing in the demo account, you cannot start with the real account. Because if you are losing there, this means that you will not win here. Treat the demo account as a real practice, not like that's totally no real practice. Feel like you have as if it is a funded account or a real account, and I want to track my result for 1 month, 2 months. Once you are profitable, move to the real account. Okay, you can't go to start the test before you train yourself. Train on a demo account, and then you can make it. Love you so much, guys. Enjoy your weekend, and see you on Monday.